Okay, welcome everyone. We'll start our lesson 4 about LO4. Today lesson will go through our LO4, understand the effect of the global market and needs for organization to operate globally. My name is Anjum Sattar and my email address and our email in case if I miss. So copy into learner work at ukversity.co.uk as well, please. So we'll go through. So today lesson inductive contents, what we're supposed to be learn. In international trade and the UK economy. So we'll see the UK economy and the international trade, how it's affect on the UK economy. International business environment will go through political, economic, social and technological, legal and environmental. Uh, Protectionism, because protect your economy against the international maybe you couple of you heard about dumping, anti-dumping mean selling the goods less than the cost in your home country, in the host country, home country where you from, host country where your operation you're doing business. So market opportunity, which will go through global growth, WTO, World Trade Organization role in emerging market. That's huge emerging market is Brazil, Russia, India, China, and South Africa. These are the emerging market. Those are fast growing market, and they have an economic growth rate around 5% plus. So EU is economics union membership, EU business regulation and their incorporation in the UK will go through EU policies, labor, taxation, workforce, exchange rate. All these come under the EU. The climate change, lot of legislation again these, and why these unions are there and what are the purpose of these unions. And the WTO roles in and the various other trading blocks those have. So let's please. So the types of organizations and their purpose, like EU is one of, we can say, yes. Okay, EU and international trade. So what you know about, please. So you can rate yourself from 1 to 10. So what EU, what is your in the previous lessons we discussed about primary, secondary markets and the primary sector, secondary sector. Now we're linking to the EU and the various trading bloc, international trades, what is about. So your current knowledge, please. Have you ever worked in international trade or international import export, and you're aware of what impact are, what are the rules behind them? So you, on the basis of this, you can rate yourself. Okay, so first explain the value of 4.1, which we have assessment criteria. Explain the value of international market to UK businesses. So first we're looking the UK itself, the total UK trade in the services class, excluding travel and transport and the banking, is around 93.2 billion in the 2018. So this is increased by 11.7% in the year. Of course, last year till now is due to the COVID-19 economic activity slowed down due to the number of reasons, and one of them was the COVID-19 and the Brexit as well, uncertainty and a bit, so that will pick again. So for time being, is that the UK export of service, excluding travel, transport, and banking, is rose by 14.3. So service industry again, UK is a key service industry and a big contributor. Think about lot of these awarding body deliver the education throughout the world, and no government is making the immigration policies toward those to boost them after the Brexit from January 2021. So there will be more opportunity for some people, and there will be some people was a bit slow down in certain sectors. So financial services continues to be largest the service sector, because especially the London is known as a financial hub in Europe and even throughout the world, because you couple of you maybe heard about the foreign exchange or foreign transaction between banks, that's happening. So we need to look around those. And that's, all is worth of the UK and the international market is 93.2% billion was in 2018, which is a huge increase again. Okay, so what is the international strategy framework? So if you want to be look around, or what are the drivers those boost the international trade, and so those we need to look around. Lot of discussion in the favor and against the globalization. So globalization being global firm inter, and they can, we as a moving goods from one country to other country. So every country is looking their own. Lot of the trade war between China and especially in US, that's maybe have a positive and negative effect. So we need to keep in mind when we'll set the strategy. International drivers will discuss geographic advantages, market selection, and mode of entry we can use in the international trade, and especially UK firms that is using to be capture the most of, and that's lot of trading agreements. So international strategy refer to the range of options for operating outside an organization or country of origin. So country of origin is a home country. Think about Unilever, one of the company. Unilever have operation in 130 countries. So that's so international strategy, home country, and we can say host country. Host country is where your operation, and host country is where you're from. A same strategy, because every country have a different culture, so we need to think globally. So we use the word think globally and act locally. So you have to act locally according to the local wishes and desire of customer, because otherwise we're not capturing the shares from the market. So global strategy involves the high coordination, intensive activity dispersed geographically in many countries around the world. Global strategy is one kind of international strategies. Okay, next. Okay, what are the drivers though drive the international market, the driver in the international trade, and especially for the UK economy as well? So market drivers, similar customer needs and the global customer, and transferable marketing. So we can look around, due to the technology that's becoming, the customer have a need the same and the wants in different part of the world. But maybe some customer are declining stay the product here, but in other part that can be a market driver for other government driver. Yes, trading policies, like various countries, the trading policy like UK government making things easier. If you invest in the certain trading zones, you have, and the government funding available for the certain import and export. So that's one of the government drivers. Car driver in the UK, car driver is no doubt is a cost is a high to set up the business, but there are the opportunities as well. So maybe the government incentive scheme and various other schemes that can be attractive. Maybe the transportation and various other costs. If you look, but maybe the car driver in other part of the world, such as in Indian market, in China, in other part of the world, can be a cost driver. Is the economies of scale. Competitive drivers, so we can look around interdependencies between the countries and the competitor global. So we can look around the European Union and the UK and the trading partners. Yes, competitive drivers we have between countries as well. So we need to look around those drivers. Okay, then according to the one of the great scholar, Michael Porter, he gave the model is called Porter Diamond model. Explain why some locations tend to be produced the firm with a sustainable competitive advantage in some industries and more than others. So four key drivers, local factors can be the local labor workforce, local skill, local infrastructure, local industry. So all these can be local related sporting industry, firm strategy and rivalry in the competition in the industry we need to look around. Then the location advantages, Porter Diamond model suggests the firm strategy structure the rivalry in the competition, factor condition, demand condition, and related supporting industry. So diamond is, you have to look around these four factors and then you decide which one is the best and where you can. The importance of international trade. Okay, then when you do international trade, why we doing it? Obsolete and the competitive advantage, because think about in UK the knowledge based economy, where can be a competitive advantage. You provide the high tech are the services to other countries, and other countries they produce the basic like food or various other basic things are the low value things. We can say a country has the absolute advantage in production of the goods. It can be produced more than the goods with the fixed amount of the resources than the other country, when the country use the fewer resources to produce the production than the other country. So maybe its absolute advantage can be for China, because there is a population and the unit cost or the production cost can become in certain products, and the other part of the world can be high tech or in more innovative. So we need to look around which country produce what, which is more economic, and everyone gets benefit out of it. Competitive advantage is the advantage the production of or the product enjoyed one country over another, when the product can be produced at the lower opportunity cost. Yes, lower opportunity cost mean you choosing one opportunity of given another opportunity. So that's, like you attending this lesson and you're missing other opportunities. So you have to measure the cost, and you have to do the cost and benefit analysis to find the best, which opportunity is best for you. The opportunity cost of the product is the alternative product that must be sacrificed and facilitated. So this theory, or the competitive cost advantage theory world economy, is a benefit from all the countries. Concentrate producing the good they are and export in the surplus. So we can produce in one country, we can sell to other country. Global sourcing, we need to look around when we decide, the international trade. Component from most appropriate supplier around the world, regardless location. Cost advantage can be unique location capabilities, ability to do something, and the national market characteristic and reputation. Then one other model we use in the international trade and the is cage model, a cage framework. You always look the culturally differences, administrative and power, political distance, because different political manifesto are the ideologies, and geographical distance, maybe your home country and the host country, economics and the wealth distance, the what is the per capita income in those countries. All this is really matter. This is the one case study I'm leaving for you to be look around WTO role in the World Trade Organization, and how this helps, to boost the international trade in back end. Okay, next, we're looking now. Anybody, any question? If you have, please. Exploring the global factor affecting the business. What are those global factors that affect the business? So four key factors we can look around: the political. Yes, in any country, political environment. Think about, the trading war between China and especially in US, especially is due to the COVID-19 and some, the we, of course, we're not going to into detailed politics, but we need to be look around, what the effect on the global trade. So these factors can be economics, the key comparative, our competitors. So we can look around the gross domestic and the national income. That can be because of the high, low economic growth. Like, in some country, there is a big gap to grow, but some developed countries, a very little economic growth, 1 or 2%. But in the developing countries, the more potential to grow. That's why you see in the economies such as India is growing more than 5%. Social factors like a population characteristics, lifestyle, culture, all we need to be look around. Okay, legal countries varies wide in their legal regimes. Yes, different laws, different. So that's, we need to look around to be. Okay, then we have an international trade. If you want to do the method of international trade, you can go through export, you can do the global e-commerce, selling things online, or you give the license to other companies to produce on the behalf of you, or the franchise business you can set up. Management contract, in your case, you can give the contract to other companies in other part of the world. They can do overseas production, a foreign direct investment. You set up your factory there, or set up the factory through joint venture, acquisition and merger. Maybe you acquire the local company, such as Unilever acquired so many local company to become a bigger and bigger, because they have a power to do, because they have big, operation. They have operation in 130 countries. Okay, then next we can look around the important of international. What are the barriers into international trade? So barriers can be because every country have a right to protect their own economy. Under the WTO, we need to look around protection. So domestic industry, again, the regime of the competition are expand, increase the import, displaying domestic production. So maybe you can 400% like some cars or some tariffs you can introduce. Tariff is it means the tax on the international trade. That's called tariff. And quota, maybe you can say quota system. You can only export or import up to certain level of product. Exchange control, yes, exchange or the foreign currency, that can be a key factor. Like think about, if China revalue its currency according to the real value, maybe the real value of the currency can be equal to the pound. If that's equal to the pound, in UK, UK customer not going to buy the goods from China. That's why they kept the currency lower. So 1 pound it can be get the goods are around 10 or 15 yens, in China. So that's we need to look around subsidize the domestic product to be reduce the cost can be subsidized to boost. Okay, important of international trade is very, so we need to look around the environment, in investment, the attract, how government policy toward how friendly, like in the UK, if you want to set up the company, you simply go on the company house, you can set up the company. But if you go in other part of the world, you have to go to the ministries, there is a long process, maybe you have to give the bribe to the official, that's, which is illegal to do so under the bribery act in the UK. That's, all we need to think about. That's also can be a barrier. Then we have a lot of, the roles international organization to boost the international trade. OECD is called the Organization for Economic Cooperation and Development, working trying to coordinate the economic policies of members and coordinate the program of economic aid, and by the providing the specialist services, especially information. IMF also provide the loans to the various and help to exchange. They give the rating to the various countries based on their different, the regulatory bodies, and they, because they rating triple A's, triple B's, or whatever, plus plus plus, yes. So these rating also affect as well on the international trade. Then WTO, World Trade Organization role, like we heard a lot of, to Brexit we deal onward on the WTO rules instead of, the European Union. So it means any goods import or export can be. So then you can decide what will be benefit to which country. Of course, there are the lot of trading blocks in different part of the world. NAFTA first, quite big. North America Free Trade Agreement between Mexico, America, and Canada. And WTO always, help to be boost, set the policies. So, but there are the rules and the tariffs being set up under the WTO. Okay, then next international agreement can be free trade areas you can set up, like economic cooperation, NAFTA, which I already mentioned. Custom union can be first. Yes, you can say, okay, no tax on your product and my product between countries. Then we can set the common market. People can be free move around. Then economics union, where we can say, the exchange and the policies and the same rule every, like, the uh, European Union, EU is one of the is monetary union as well. It's the same currency, same rules within EU in all countries, 28 countries. Okay, so that's we need to look around. Then we also international trade and exchange affect due to the balance of payments as well, the nature of the balance of payment, how much import and export you have, how much current account, your deficit, capital account, and the financial account. Every country is more, and that is quite crucial. If your current account affect, the positive, and your export is more than your import, your balance of payment will be and in your favor. So always is crucial to look around. That's also help, to boost the international trade. Okay, so every country, and we can look around the balance of payment UK and against the other part of the world, or overall, we said, 60, like, in my slide one, we discussed about 93.5 billion, the trade international market worth of. So we need to think about, what about that? If that was the export, what is the import of that? So that's, represent the balance of payment. Always, we want to be more from the outside export than the import, which is every country is looking at. Balance of payment, current account, transaction, trade in goods, trade in services, income from the profit and the dividend and transfer. The capital balances is made up by the public sector flows of the capital into and out from the country, such as the government loans from other country. The balance of financial accounts is made up flow of the capital and the non-governmental sector. So, like, think about a couple of you maybe watching the atomic electric plants. Yes, government policy from 2050 to be developed, electricity and all will be the renewable electric will be generated in the UK. So that can be what we need to think about, what the effect will be on the balance of payment. Okay, then next, balance of payment and exchange rate. Of course, you have to look around the exchange rate. Floating exchange is set by the interaction demand and supply. So you set the exchange rate based on the demand and supply. Fixed exchange rates facilitate the trade, maybe set the term of the gold or the reserve of the currency, and maybe your note published can be based on purely 100% on the gold, or bill of exchange between between the other countries balance of payment, or on the credit or the letter of credit. The floating rates occur when the government or the central bank buy and sell own currencies into the achieve certain targets and the rates. Okay. Floating exchange rate changes in the supply and demand, like earlier in the previous slide and all, we need to look around the demand and the supply and the fluctuations. And that's, crucial in the international trade. Single European market or the European Union, they combine the free trade areas with the custom union and the common market, all which we'll go through. GATT, which is general agreement on tariff and trade, 45% less than the 7% of these negotiations are known as. So during the time when the world trade is growing dramatically, there's a lot of gas, is general agreement on trade and tariff between various countries, and the preview of the strategic, so inside we can help, reduce. So we need to look around that what can be countries benefit, and of course, there can be. So method of the payment in international, the most common method when you purchase and deal, you can pay the cash in advance. Letter of credit is one of the key to be boost. That's all been given. The documentary collections, open account. So all these, things. When other things we need to be look around when you deal, these are the methods. Yes, what time of the payments, goods available to importer, what are the risk involved, and the risk to importer or exporter. So we need to be measure it when we decide, that is good, we need to look around before. So risk is the probability of happening something. So this diagram, it shows, what sort of the risk can be, and we need to be least secure and the most secure method. Yes. So that can be most secure letter of credit, LC. You may be couple of heard about importer and exporter. Yes, because of course trade, international trade can be. And next we're looking 4.3, evaluate the impacts of EU policies on. There are the lot of EU policies impact, some positive and some negative. That's why the UK wants to be outside the Brexit and want to be set up own rules. That's the key element there. Set on policies, they set on, the rules, and set on whatever the national minimum wage or the labor laws or the fishing laws and various other. So European Union is the single largest market in the world, of course, 28 countries. UK businesses has increased significantly by IK membership is the European Union, yes, and various memberships, and the benefit like, reduce or abolish the selling tax, sale tax, there is a no VAT between if you registered EU supplier and you registered UK supplier, you don't have to pay the VAT. But after, 31st December, maybe the things will be different. So at that point, we need to look around what new arrangement will be. So step to become the European Union. First was the free trade area between the country where you can do the trade. Then we came to the custom union, add the unified trade policies for the countries outside agreement. And then the common market, free movement of labor, capital, and technology, like between the countries before 2007, the European Union, that can be common market. Then is moved to the economics union, which you have a currency same as well. Add the coordination of the economics policies and the same currency. Yes, is a monetary union as well. So EU competition policies ensure the market competition remain the free and the companies work to provide the best product. So there is no such as the monopolies. So like like recently as that tried to take over the Sainsbury, but under the European Competition Commission as well, the UK, which is embed those laws and said, sorry, they can't take over because the reason otherwise will be monopoly position. So these are the rules we need to, the single European Union, which we said free goods and move, and the VAT rules we need to, and that's, help the company to boost the sale. So it's very crucial in terms of the companies to look around the tax side, tariff side. So tariff is involved in the international trade. So we call tariffs. So that's, and we need to be well aware of the Incoterm. The Incoterm means the term which we use for the international, like, when we'll say FOBs. So a couple of you maybe heard about free on board. Yes. So like, the no tax, we will provide you goods on your on your port free of tax. So that's, always is crucial to be. That's in the EU and the European Union. We don't have to pay these. Okay, the single European Union, the telecommunication should be subject to the greater competition. It should be the greater to provide the financial services in any country. There should be a free movement of the capital and the labor within the community. Professional qualification awarded one member state should be recognized in other, like a driving license, like qualification, that's the fully recognized in other part within the EU, because the standard being developed and the policies being set up, and that's, the protection, the interests all the union members. Okay, then the European Union and the operating environment, European Union monetary union. There are the three main aspects of the European Union. Common currency, this is euro. The European Union Central Bank, yes, are the role of issuing the common currency, conducting the monetary policy on the behalf of the central authorities, acting as a lender of the last resort in the European Union, like in the few years back or the last year before, in Cyprus, the economic slowdown, and the European Union injected a lot of money. So centralized monetary policies applies across all the countries within. So that is a bit issue, here, because monetary policy, UK is not full in the monetary union, but UK is in the European Union. So still they have to follow the lot of policies. So that's why is one of the issues the Brexit has happened. Okay, surrender the control over the aspect of the economics policies. Therefore, the surrender of the some political sovereignty by the government of each member state and central government bodies. That's why there's a lot of discussion. The Germany's rule is more important, are giving, the emphasis a lot to be implemented throughout the European Union. So that's, the all one good few reasons. So environmental management, we need to, EU has the actively raising the environmental standard. That's why the lot of mining industry is being closed in the UK, and there are the CO2 tax are the other, like environmental taxes. So list of the hazard waste, there are the European Union laws as well. We have to look around the waste packaging. Yes, you have to be clearly say the recycling policy, and even you have to be signals on your different product, like the green, red, amber, yeah, the traffic light signal, the food and the fat levels within those, the product. It's crucial to be under the European laws, under the European Union. Okay, then the last, the European Union and the operating environment. So always we need to look around by 2020 to further boost and renewable. So that's why in from 2020 we need to look around in will be, so a lot of, the boost in are using more electric car and the renewable energy. That's why the UK government is emphasis to be from 2050 to be more electricity to be generated by renewable powers. So we need to be look around. That is all about the European Union, role of UK economies, world trade, and the role of WTO. So thanks for listening, guys. If you have any question, anyone, drop me email or drop emails and copy into the learner work as well. And I hope so. I'll speak to you all during our next lesson, and we'll go through. And thanks for listening and attending. Thank you. Bye bye.